Today we're going to talk a little bit about California HOA tax returns. As a CPA firm that does HOA tax returns for associations in all 50 states, there certainly are some states that are very difficult to do business in and to file tax returns. California, of course, would be one of those states. The tax returns there are actually much more challenging than Form 1120H on the federal side would be. So it's very important for you to understand that doing the HOA tax return on the federal side is relatively straightforward, but California does have some challenges. First of all, California does allow exemptions under FTB 3500, okay? This is a form that allows for an HOA to have an exemption. Now there's two tests that it needs to meet. It needs to meet the organizational test, number one, and the operational test. And these tests are very similar to Section 528 on the federal side, but essentially assuming the IRS, or excuse me, assuming the state meets this exemption requirement, then they aren't going to be subject to any taxation in California. They still have filing requirements though, and they still have filing fees. They're still going to be subject to filing Form 199 and Form 100. So they do have to file those separate forms, but the good news is they're not going to be subject to a corporate level tax. They still have the tax assessed under Form 199, but again, not that big of a deal in light of all the other tax filing requirements. So again, I think the moral of the story is make sure you understand some of the California filing requirements. If you're a new organization, make sure you take a close look at FTB 3500 to qualify for the exemption. And just remember that the California returns are going to be a little bit more complex than the Fed side, but again, they are required on an annual basis, so make sure you stay on top of it.